Welcome back to the Malaysia Money Matters show. It's the 11th of November 25. Our mission today, well, it's a rapid-fire deep dive into Monday's headlines. We're looking at the key corporate results and the political developments really shaping the market. We're here to explain that. And so what impact for you, the listener?
Absolutely. And that's vital because you've got these quite clear corporate strategies playing out, raising debt, sustainable finance, but happening right alongside some pretty high-stakes political uncertainty. Understanding that tension is, well, it's crucial for navigating the local market right now.
Okay, let's unpack some of that corporate action then, starting with capital moves. Genting issued RM 900 million in bonds for the Genting Malaysia acquisition. Good strategy. Aggressive.
Oh, it's aggressive, all right. But look, it raises huge leverage concerns. Analysts are now projecting their debt-to-EBITDA ratio could hit 5.1 times in 2025.
5.1 times? Wow.
Yeah, and for context, anything above 4 times is generally seen as high risk for leisure stocks. So hitting 5.1, well, it means every future move, even dividends, will be under our microscope.
Right. So is this new financing essentially kind of mortgaging their future stability just to get this asset locked down?
That's certainly the risk, yes. Speaking of tricky corporate moves, look at IHH Healthcare. Their long-delayed takeover offers for Fortis Healthcare and Malar in India.
Yeah.
They closed with negligible acceptance. We're talking as low as 0.00002%.
0.0002%. That's almost impressively bad. Sounds like a tough lesson in M&A timing.
It really is. Essentially, the share prices of those target companies just did too well since the offer was first announced. Shareholders simply had a better return waiting it out.
Okay. Now, for something maybe a bit smarter financially, SD Guthrie issued Malaysia's largest sustainability-linked Sukuk, RM 2.1 billion.
Yes, this is quite clever. This sustainable bond, the Sukuk, it does 2 things. 1, it redeems a higher interest perpetual Sukuk, so that saves them about RM 42 million a year.
Okay, smart.
And 2, that saving is actually linked to them hitting sustainability goals, like cutting greenhouse gas emissions by 30%. So it's ESG strategy in action. Shows financial and green discipline. Oh, and quickly, Apex Healthcare's RM 2.64 per share buyout offer looks very likely to succeed. Major shareholders are committed, so it's a good exit for minority investors at around 21 times earnings.
Got it. Okay, looking regionally now, Maybank is facilitating over RM 15 billion in financing and investment for the Johor Singapore Special Economic Zone, the JSSEZ.
Yeah, this is a serious commitment to the zone, and what's interesting is the support for establishing single-family offices in the Forest City Special Financial Zone.
SFOs. Why is that significant?
Well, attracting SFOs is a big win. It brings in, generational wealth, sophisticated capital. It really helps move the whole zone up the value chain.
Makes sense. We also saw some positive growth signals. Sunway REIT's third quarter net property income jumped 25.3%, mainly from new assets like Sunway 163 Mall, right?
Exactly. Full quarter contributions kicking in. And also, CIB Kakrin is aiming for its first earnings from its Indonesian poultry venture with Salim Group, possibly next year. They're leveraging Salim's huge distribution network, like 23,000 Indomaret stores. Quick path to returns.
Okay, but not all sunshine and roses on the performance front. Mr. DIY Group reported an 11.9% rise in 3Q net profit. Good margins, store expansion, but softer like-for-like sales.
That's right. Margins were strong, actually, 47.3%.
Yeah.
But yeah, softer sales due to, challenging conditions, subsidy removals, that kind of thing.
And that contrasts with Hupsang Industries. Their 3Q profit slipped 10.4%. They flagged rising costs, right? Raw materials, distribution.
Yeah, and uncertain export conditions, too. And then there's PIE industrial stock took a hit after weaker results. Worries about U.S. trade policies, the shift to the Vietnam +1 strategy. Their recovery really hangs on getting a new server customer for Plant 6. So definitely uneven pressures out there.
Okay. And one positive mention, Siem Darby Property won the Edge Malaysia Top Property Developers Award again. Second year running.
Good for them. Shows consistency and quality in financials.
All right, so that's the corporate picture. But politics, as you said, is adding volatility. PM Anwar called an urgent cabinet meeting today about that high court ruling Sabah getting 40% of its revenue.
Yeah, this is a massive issue. Remember, UPCO already quit the Pakatan Harapan coalition over this exact dispute. If the federal government decides to appeal, well, that could really escalate things. Big stability question mark.
And other governance issues are resurfacing too.
Okay.
The Home Minister confirmed they're reopening probes into the disappearances of Pastor Raymond Koh and Amri Chemat.
Yes, following a court order. And we also got a date for Muhyiddin Yassin's trial. related to the Genting program funds, March 9, 2026, set for 29 days. So these trials, plus the Sabah issue, it keeps political risk quite high on the agenda.
Okay. On the economic policy front, some positive numbers. 5 economic corridors attracted what? RM 87.56 billion in investments up to October 31, creating over 108,000 jobs.
That's significant investment, definitely. But there are domestic challenges still. Unemployment held steady at 3% in Q3, which is good. But skill-related underemployment, graduates and low-skilled jobs, that's still affecting over a third, 35.5% of the educated workforce. So attracting money is one thing, creating enough high-quality jobs is another. Also, those talks between Petronas and Petros over the Sarawak gas distribution framework, still ongoing. They're trying to find that balance, recognizing Petros but respecting Petronas' role.
Right. Quickly then, on the global front, the U.S. Senate moved to end that record federal shutdown.
Yes, a compromise deal. And that gave global risk appetite an immediate boost, as you'd expect.
Okay. And GoTo shares jumped. Reports about Indonesia's sovereign wealth fund, Danantara, getting involved in potential merger talks with Grab.
That's the buzz, seen as a way to maybe ease government concerns about combining those two regional giants.
Interesting. But a note of caution from the chip sector. TSMC reported slowing sales growth.
Yeah, 16.9% monthly growth. Still growth, but slower. It's fueling that debate, about how sustainable this huge AI boom really is, even though the big buyers are still planning to spend more.
Okay, so pulling all these threads together, what's the takeaway for our listeners navigating this landscape?
Well, I think it shows the market is it's responding to clear corporate strategies. You see it with ST Guthrie's smart Sukuk or even Genting's growth ambition, despite the risks. But at the same time, these major political uncertainties, especially Sabah revenue, the high-profile trials, they're still there, creating friction, creating background instability. So the real challenge for you is balancing that strategic corporate opportunity against this sort of fundamental government risk.
A complex picture indeed. We hope this deep dive gave you a quick yet well-informed view of what's happening right now. We encourage you to subscribe to the Malaysia Money Matters podcast for more deep dives into the news that matters.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.